All right, everybody, welcome to CyberBulls. So we are watching big changes happening right in front of our eyes. There's tectonic changes. There's going to be some winners and there's going to be some losers. Let's explore what is happening in this industry. What's happening with Tesla next week in Q3? They're going to be announcing their earnings call. There's a lot of questions that institutional investors are asking and a lot of questions that retail investors are asking. So today we have the bulls with us. We've got Jeff Lutz, and we got Christian Valente and Xander's Guy. Welcome, everybody.
Good to see you guys. What's up?
Okay, so today we don't have Alexandra Mertz with us. Let's get started with the institutional investors. We're going to talk about the Q3 questions that are being asked. So next week, Wednesday, there's going to be all these earnings call, and we're going to see some financial reports explained by Tesla. So one of the very first questions that the institutional investors are asking is, can you please provide an update on capacity expansion plans for the company's factories in Berlin and Austin and the opening schedule of Gigafactory in Mexico? Any questions on there? Let's start with you, Jeff.
Yeah, it's good that they take questions from retail and from institutional. I mean, it's a logical question. Tesla will publish their capacity plans by factory in their earnings, download, their PDF that they send out. So I think by the time that this question comes out, I think some of this will be answered. I don't know if they're going to include Mexico and start adding that in there or not. But knowing that, Tesla has a lot of different levers that they can pull to change the capacity of their existing factories. If you remember, Shanghai was going to be 500,000 a year, and now that factory, is capable of producing over 1 million a year. And you just started seeing the updates in the earnings deck. So I wouldn't get pinned down too much. It will be good to know, like, okay, what are the upgrades you did in Q? I mean, to me, the question was like, what did you do in Q3 with the downtime, and what are we going to see on the other side of it in terms of factory transformation? Are they faster? Are there more capacity? Are you able to handle models in different sites? That would be the question I would want to know.
Christian, I want to ask you this question because I know that you've all of a sudden became a bull again for Tesla. And I want to ask you, does it matter to you what's the target of the growth of how many cars that Tesla's going to be able to produce next year? And so do these questions matter to you? Are they your top, or is it like something about robots and that's the thing that really gets you excited?
Yeah, no, good question. So I've changed my thinking 100%. The auto business is the auto business. There's no surprises anymore, right? The Wall Street, all the institutional investors, we understand this game now. We already have the delivery number. You can kind of guess an average selling price. You can kind of guess an operating margin. You got the earnings, right? Like it's going to be a few cents here or there, barring any, major disaster. So that's not the story for Tesla anymore. So these questions are great, but it's really, for me, it's the AI story, right? How fast can they get Optimus going? Like next year, I would love to see a totally operational, like even more than what it is now, like more that the world understands this is happening. It can do things. It's very functional. It's very valuable. It's, something like that. The FSD, a licensing deal. That is the next story of Tesla. The auto business is the auto business. The energy business is still exciting because that's still young. But again, everybody keeps talking about cars. It's important. But for me, the car business, any profits, any cash flow is funding these other endeavors. That is what is going to get Tesla to a multi-trillion-dollar company. It's not cars. They're already valued on the car business, right? It's $800 billion. Toyota, when they were at the biggest ever, they were nowhere near an $800 billion market cap. So the market's already given Tesla credit. So the only way I see autos becoming the dominant theme again, where it could push Tesla much higher, is either margins reaccelerate dramatically, not like 1%, 2%, or the other autos, and we're going to get into that, the Fords of the world, the GMs, completely cannot make electric vehicles at scale. They almost give the whole market to Tesla with that IRA coming in, and then Tesla reaccelerates it. Other than that, this is a definite, more of an AI story, a bot story, an FSD story. So this is all good, but this earnings is going to be pretty boring. The only excitement is going to be what Elon says about an Optimus update, maybe, an FSD update. But other than that, we understand the margins. We understand the units. We already have them. And it's going to be, if it's based on that, it's going to be a boring call. So that's my view.
Okay, well, what about Giga Mexico, right? So we did hear from the Walter Isaacson biography that Elon made the decision to actually create the test line for the compact car at Giga Texas in May. And so even though there's a delay on the Giga Mexico, it's not that bad. It's not that big issue. What do you think, Xander? Is that something that you're concerned about, the compact car timeline?
I wouldn't say I'm concerned about it. I think that's going to be what it's going to be, and I think it's a wise decision to move it to to Texas. It back to your previous question, it can impact the number next year of how many units they can produce, and if they're going to target their 20 million cars, they have to keep making progress on growth, as Jeff says it. I don't remember. Can you check the notes? Units per location. Jeff, help me out here. I forget.
Yeah, no, I think it's output per square meter, but
there it is.
Moving the compact car to Austin is going to enable a scheduled pull-in. So that's the right move. New factory, new product, never the right move. I've had this conversation with a lot of different people in a lot of different industries, so I'm glad they're doing this.
Scheduled pull-in. I'll write that down.
Right. And what does that do to earnings? That's going to be the question, right? What are they going to guide?
Well, they're going to have to start telling people like what they're doing. Everything can't just be a surprise. The other question that should be in this earnings deck is, where's the energy outlook? That was supposed to be split out and reported on by now. So that we should hopefully see something.
He said Q3 or Q4. So we'll see. Yeah.
Okay. You're running a multi-billion-dollar business. It'd be nice to hear about it.
All right. The next two questions from the institutional investors are actually very surprising, and I'm so proud of them. It's about FSD and Robotaxi. So look at this. So the second question, voted up, right? It's right up there. Is, do you have a timeline for Robotaxi? What excites you most about this project progressing? And number 3, it's neural net path planning. So they've been listening to Elon talking about the new FSD version 12, represents a significant advance in capability and safety for FSD. What steps is Tesla taking to make this technology available outside the US? Wow. Don't you guys love it? They're talking FSD and Robotaxi.
We thank Jonas for this, or who do we blame?
What do you think? Yeah.
Well, I think they should be having the FSD conversation before a Robotaxi conversation. I mean, we're nowhere near having a Robotaxi conversation. So we need to understand where V12 is and what does V12 mean? How much releasing and how much soak time do they believe that needs to be on V12? Are they on track by the end of the year to basically, for FSD to not be beta? And what does that mean in terms of performance? What was the promise by the end of the year, and how are you tracking to that? So I think that's more of the appropriate question. When FSD stabilizes and it can basically, you get in it every time and you're having drives with no intervention, regardless of what geography you're in, I think you're very close to then having Robotaxi conversations. But I think you've got to look at these things in proper sequence.
And it's, everybody continuing to talk about FSD and Robotaxi, and rightly they should. But I am still believing that the bot is going to be quicker and faster than Robotaxi or FSD. And I know you feel the same way, Christian. Why don't you share your thoughts?
Yeah, for me, look, I want FSD to work out, and I want everything to go well. And I know it started way before, Optimus. But to me, Optimus, it's like I look at it, and someone put a video up on X today, I think. It showed the progress from 2022, right, when they could barely move this thing. They had to push it out, and now it's doing things on its own. It's stretching its arm. I mean, the progress on that thing in 1 year has been incredible. So like I can imagine one more year. And just for me, it's just my point of view. It's a bot. It's valuable. It's not a car speeding at 80 miles an hour that can kill people. It's something there that you can use that can assist the world. And that has value. And you will, if a company can make something, and we see it happening, I see it. It's going to be a great product. It's going to be a valuable product in so many ways. And all you need is to get that out, and it will change the world. And you will assign the value, the economic value, to the company that can do it, and that's Tesla. The money generated from that thing, I don't care if it happens 2 years from now, 3 years from now, investors will start to put that in their models, and they don't need it to hit and wait till a million are produced or 50,000 or whatever. Once you just keep seeing it, for me anyway, that's what keeps me in the stock. The Optimus bot is something that you've done a lot of work on it, Herbert. I'm just saying from a high level, to me it looks beautiful. It's designed beautiful. It's one of those products I look at it, every time I look at it, I fall in love with it. And then when I can see what it can do, even the simple task it does now, and all the things it can do in this world, maybe it doesn't have to do everything, but some of the basic tasks that is so monotonous that you could stick this robot and just let it do, there's so much economic value across the world because it could be used for so many different things. So I just think Elon coming up with that and pivoting to bot was a genius move. And I think that is the game changer for this company.
Okay, so I can call, if it's okay, with due respect, let me call you an average Joe. But as an average Joe, absolutely, you actually picked up on the bot. I want to ask a question for the panel here. Which one of us thinks that in the next 6 months, which is going to be the bigger mover for the stock, the contributor to the stock going up? Is it some sort of realization by the investing community about the bot? Or is it going to be something about their realization about FSD? So in the next 6 months, which of those two might have the more impact? So let's say they do a demo of the bot, and then more investors realize it's inevitable, it's going to come, or maybe they release FSD version 12. So let's take a vote. In the next 6 months, who thinks it's going to be the bot? Me and you, Christian, right?
Yeah. Instead of
you
a
guys are
GPT moment for FSD, it still may happen. I'm saying there's going to be an Optimus moment. So you come up with a funny vernacular for that. That will be the moment. And when that moment hits, look out. I think that's the lookout moment.
Yeah, but if the bot is dependent on FSD and it's
not.
Yes.
I don't know if it's
no,
dependent.
they are.
Is it
of course it is. That's what that's what determines if it can move and do what it's supposed to do. Not move, but think, right?
No,
if
but
it
we
can
know
think.
that FSD works. The only problem is it has to work perfect on highways that could kill people 80 miles an hour. The bot might screw up, but it could bang into a wall. No one's going to die.
It's useful immediately. Yeah,
right.
The bot is useful immediately.
It's not going to kill anyone. It doesn't have
where
to be
do you
perfect
stand,
all
Jeff?
the time. If it gets the block, it could fall it. Like it doesn't matter. It doesn't matter. Sorry.
It does. It does. No, it does. I mean, if you're in a factory and that robot has to do 10,000 operations a day, and it has the error rate of like current FSD, you're going to have a poor running factory line. So they've got to improve this fairly dramatically. So I do think there's a larger dependency. I get the life or death, the Tesla Q quotes coming out about cars going very fast and killing people, robotic cars, but I'm just kidding. But no, I don't think the bot, I think the bot they're just going to continue to make progress on, meaningful progress. Like it's great what they're doing. But what has to really get announced in the next 6 months, forget about the version of FSD. Nobody on the street cares. I was going to say gives a, what. Nobody cares V12, V13, V69. Nobody gives a shit. What they care about is, do we have licensing deals starting to get lined up? That will move the stock. We thought the charging stuff moved the stock. You imagine a licensing deal for FSD where Tesla's selling hardware, they're selling software, and they're selling network services via Dojo as part of a multi-year deal to major OEMs. I think that's a big deal. The only question is going to be is which OEMs are going to survive and be around by then. And that's we'll talk about that a little bit later.
There has been some smoke coming out that there might be licensing coming soon. I will say that you guys are correct that if you look at just the investor interest, out of the 16 questions, 10 from the retail and 6 from the institutional, none of them were talking about the bots. So it's still very much like everybody thinks that it's something far away, and that's why they're talking about this. So let's move on. Here is the next question. Here is they're asking about the gross margins of Model 3 Highland versus the legacy Model 3. So again, they've already announced, right, that the Model 3, they've reduced it by 30% since its creation in 2018, launch in 2018. And so they're very likely, I think, at the earnings call will say this is the additional gross margin improvements they think. What do you guys think? Is that something they normally do? What do you think, Xander?
Yeah, I think the margins can improve. I think Jeff is much better at at telling that story, but the earnings per car have to go up if you're going to keep driving the price down. So I think it will hopefully contribute to that number flatlining, the automotive gross margin and start coming up a little bit. But I think to tie in your previous question, it's really the Elon's statements on the previous earnings calls about FSD revenue starting to go up, that will drive the margins, and I think that's what we need to see in order for the stock to react in the next 6 months.
Jeff, comments on the Model 3 Highland?
I mean, I think here's with Highland, they've added a bunch of features and they've also simplified the product, is what we believe. Regardless, until they get to their peak run rate, they're going to be under gross margin pressure. So I wouldn't want to know, quite frankly, what the gross margins are now. I want to know what they are when they're running that product at full rated speed. Until then, it's going to be a bit of a drag, and that's probably one of the reasons the MSRPs are a little bit higher on the Model 3 Plus. But there's also added features in that as well, so it's got to ramp up. But I think it will be when you're doing product succession planning like this, nobody plans product to replace the prior generation at a worse gross margin. Nobody does. If you do that, like, you've made a gross error. So I'm assuming they're planning for this to be higher gross margin. It just needs to get the scale.
Actually, a good point. Thank you, Jeff. Basically, they just launched Highland. You've already mentioned before that typically this is the first few months of a product launch is the highest cost. And so this may not be the time to share the gross margin yet, right? It'll improve over time. Thank you for sharing that.
Yep.
The next question that's been asked is, they said that current sell side consensus assumes that Tesla is going to deliver 2.3 million vehicles in 2024. That's a 28% growth over the 2023 guidance of 1.8 million. Is this growth achievable if you don't have the mass market launches in 2024? And when does Tesla expect to return to its 50% long-term CAGR?
It's on its 50% CAGR still. They all have to do is 1.7 this year and change, and they're still on the 50% CAGR. So they need a filter on these questions.
But and 2.4 next year, right? If you do the 50% from the 2020, the 5, you go 50%. You're right, because 750 would have been, and you keep going. So they're there. But Herbert, again, we're getting into the minutia. Like let's just have a general discussion right now. So Tesla stock has been going up. Earnings estimates for 23 have been going down. Earning estimates for next year are going down. So the stock is stabilized and going up on earnings that the street think are going down. So for Jeff or Xander or Herbert, I know why I think that is. And maybe it'll change and the stock will go down eventually. But what is holding the stock up? I think it's more of this. Tesla is the future with the AI. Even though bot might be a couple years out, they can see the progress. FSD, a licensing deal, that could change earnings, right? Because then you got all that money coming in for per unit. And guess what? The UAW, man, they're making it really hard for this legacy. Ford's in 40% of production is offline. Profits are going to be crashing. They might be desperate enough to do a deal with Tesla just to, do something, because they're a mess right now. So I could see Ford. Farley's pretty nice with Elon. I could see them working out something. So I don't know. I think Tesla is becoming a different story. I know everybody wants to focus on the cars, and I get it. You need some type of earnings to hold the stock up. But I don't think it's trading on units anymore. I don't think it's trading on, is the margin 1% higher or 1% lower anymore. I could be completely wrong. I think it's trading on more of what the future is. Investors want to get in now so they can be there for a possible FSD event or a possible bot event or a possible energy explosion. And I think that's more important than these specific car questions. I've moved on.
Yeah, I think you're right.
Business.
I think you're right. I think you're right. And that's Tesla's balance sheet has transformed in the last year or two, right? They went from a couple of years ago, right? They're raising capital and they're doing all these different things, and all of a sudden they're throwing off free cash. And what they've been doing the last year is really heavily investing it in new product lines and new complete areas like bot and dojo. So there's been a drag on the operating margins as well as what they've done with pricing. So yeah, I think you're right. The market isn't I mean, there is some minor trading happening. When there's a couple penny change, right? And EPS, I think we look at a meme offline a lot about just a few bit of a change in EPS, but the real thing is are these future endeavors, but I actually don't think that they're getting properly priced in. I think there is, you use the term this term of like there's something out there that could drive the value of the company up much higher. We know it, obviously to be energy, AI, FSD, and the bot. But I actually don't think a lot of AI is built into the Tesla name. I still don't think that is sunk in. I think the Jonas notes started that process, and maybe it put a little bit of a floor under the stock for a certain period of time. But yeah, if they have, I mean, if we're talking about Q3 next week, and if it's largely disappointing, if it's way off, I think consensus is like 72 to 75 cents in earnings. If it's way off, I mean, yeah, it may trade lower for a bit. But again, I think with Tesla, I think what's happening is the amount of exciting news that's ahead of the company, like it's getting closer and closer and closer. We just crossed over into the Model 3 Plus launching. That's going to be a better Model 3. That's the highest. That's the most selling EV Tesla any company's ever made. I don't think Model Y has even passed it yet. Well, soon. And then you have the Cybertruck nearing, and then is there a licensing deal, coming very soon in FSD? Are these other things happening with FSD? By the way, you're going to see more FSD recognition in this quarter. I don't think people are talking about that enough, but in September, they moved, that city streets, turn by turn navigating on city streets out of coming soon and into the main release, which means that they're going to recognize more of that in revenue. So I think Christian's right. I don't think this is earnings went down a penny here or there. I don't think that's the current story. I think it's more about what's ahead I think the markets are actually looking even beyond, they're definitely looking at through 2024, but I think they're also looking beyond. And I don't think they need a mass market car in 24 to drive to the 2.3 to 2.5. Again, what people don't realize with EV is, number one, we only have 8%, market penetration in the US, for example. I think it's around 18 in Europe. It's still a majority of the cars being purchased are non-EV. So there's rapid growth happening, and Tesla still has more supply and has better product at more price tiers than the competition. So I don't think there's going to be too big of a problem to answer that question, getting to the 2.3 to 2.5.
I don't know. I mean, so I think you and I flipped positions here, Christian. I actually agree with everything you said, because I've always agreed with everything you said. But when I look at what institutional investors and what what retail investors.
Leave him alone. I like that line.
Yeah. But when I look, so it's what I believe in, what you believe in, what Jeff and Xander believes, right? But it's not what the investors believe yet. They're still tracking the earnings, right? They're still saying what you were saying. What about next year when we see?
Herbert, but like you had price decreases on the high volume cars and the stock, and you had analysts re-rate, and you
That's
still
right.
have
That's what
stock
I mean.
holding up. Right.
That's exactly my point.
But that goes to Christian's point that it's the story has changed. It's no longer just about earnings per share next quarter or next year. It's the market appears to be looking further forward, or you just ran out of sellers, or whatever the case is.
My point is that that I believe that the stock price today at 265 does not have any AI, does not have any energy, does not have any bot in there. It's all just cars, and that's where we're at today. Am I wrong? And if the story has changed, we should be seeing, now that they're talking about supercomputers, now that they're, the institutional investors are asking questions about FSD and Robotaxi, we should be going up because of the AI story. I think that's about to come still.
Yeah, I agree with you, Herbert. But what I would say is, and we talked about this a few months back, I think there is a little bit of AI in the stock price. Remember, you can't just say 265. You got to do it from a market cap. It's 800 billion, right? So you have to look at it like that. A stock price doesn't tell you anything. 40, 4,000, it doesn't mean anything, right? It depends about outstanding shares and how much money they're making. So at 800 billion, for the earnings they're doing, right? There is a lot built in. So I agree with you. AI, all of it is not in. But I think there might be 10 to 15% in that stock price. And it's hard to know. But here's the way I look at it. When you buy Tesla today, an investor that's new to the story or is adding money, what are they buying? Yes, you're buying the EV business, but what are you really buying? You're buying the future. You're buying the next 3, 5, 10 years. You're buying the potential of a Tesla bot being mass marketed that is going to change the world. You're buying, a car, a robot on wheels. You're buying a possible licensing deal to many auto manufacturers. You're buying an energy business. You're buying a battery business. So you're buying the EV business. But again, this is the way I think about it. The EV business is there to fund the rest of the stuff. The EV business is there to make money. Like Jeff was saying, the free cash flow is going down. They need to still invest in the infrastructure with superchargers. They need to invest in the production of bot and those materials. They're going to need new factories. So we were talking about the buyback debate. You don't buy back stock on a company that's worth 800 billion when you only have 20 billion in the bank. Even if you threw 5 billion at it, that's not going to buy many shares. It's too big. If Tesla was a $200 billion market cap, I would say yes, implement a buyback program. But you're not going to get the money, the real bang for your buck, because the stock is not trading at a major discount. We may think it's at a discount for what the future is going to go, but no one believed that bot is going to be this $1 trillion thing or FSD. So I agree with what you're saying, but I do want to just let you know that $800 billion of market cap means you buy this company for 800 billion. There's a lot in there, right? The earnings right now is not worthy of that 800 billion market cap, in my opinion. The only reason we think it is because of the future. It's really not, because if it's just an auto business, I just talked about Toyota. They did how many units, and they did good operating margins. If Tesla did, say, I don't have a calculator, but say they did 10 million cars at an average price of 40,000, that's $40 billion. If they took all the thing to the bottom line and say they had a 10% operating profit, net profit, which is generous, that's what, $40 billion. Well, if I just give it a 30 multiple on a very stagnant auto business, that's $1.2 trillion valuation. That's 50% more.
Yeah.
And to get to 10 trillion, that's going to take 5 years. That wouldn't be a great investment. So it's got to be more than the auto business now. It can't
It's not.
Be just
it's
that.
the auto business.
Yeah.
And what you just said was exactly what everyone was saying 2 years ago. I just did this show where I was do a clip of Nicholas Colas, who's a research data track research, and they showed him a graph, which is the famous graph where on one side you've got Tesla at $1 trillion valuation. This was a couple of years ago, right? And on the other side, you've got 12 companies all stacked up, and they're less than $1 trillion. And so they're saying, why is it that Tesla is worth more in market cap versus these 12? And that we nothing to do with bot or energy or any other thing. It's just simply the auto business. And Nicholas basically simply says, he looks at it and goes, dead, alive. That's it. The market is realizing that every car company is going to die, except for Tesla, and it will survive. And that's why Tesla has an $800 billion market cap. It's not because of what you're saying, which is, everybody's recognizing it's an AI company. Everybody, a little bit. I know you're not saying a lot. No one is giving it any value yet for AI, for bot or energy, or for Robotaxi. Those are still a little bit far off. Maybe a little bit, but not a lot. It's all about the car company still. The future of the car company, not the future of tech.
Yeah. I agree with you, Herbert. And the only thing I'll say is that's my second scenario. If Tesla becomes legitimately the only auto manufacturer and all these legacy completely die, that was my other thing where Tesla stock could go through. But if that, to me, is still a little bit kind of hard to see that everybody goes away and you just have Tesla as the only one producing cars. I just don't envision that.
No, it's not going to happen. That won't happen.
Yeah.
No. Yeah. What are you doing, Xander? Did he do that on purpose? We can't hear you, Xander.
I don't know. Did I do my math wrong, Xander?
All right. Anyway, I don't know what he did.
So no, I think it's a good discussion because again, why, like, I don't know. I just keep like the margins are not good. Like we know what the margins are not going to be that good this quarter. Like as much as they reduce COGS, they keep reducing price. And I'm not stepping on Jeff's toes, but it's hard to, get a reacceleration of profitability when you just keep dropping price. And Elon in the book, here's why I think differently now. Elon was not excited about a $25,000 car. He didn't want to do it. He said, no, this is the future of the company. He said autonomy is the future of the company. He didn't even care about a $25,000 functional car with a steering wheel. So the CEO who we're investing in is not excited about what you're excited about. He's excited about AI.
Who says I am?
AI. No, I know, but
yes.
I'm saying like Wall Street. Well, if they get the mass market car, they'll do this, they'll do that. That's not going to drive profits because if you're selling a $25,000 car, you're making a few thousand per car.
Yeah.
Where's the value in that? That's not going to, it's not there. You need the AI to make the value.
Yep. And that's why the 800 billion market cap is the floor. That's the auto only. Once you add in the AI and all these things, it's going to just
you need this other
quadruple.
Stuff.
Yeah.
Go ahead, Jeff. What do you have to?
I don't know what Tesla's going to do the last 10 weeks of the quarter, but the Model Y price cuts $400 aggregate across the globe, and they reduced COGS globally by $1,200. So seems like they're slowing the pace of price reductions and they're allowing their supply chain to maybe catch up. Who knows? I think Q3 is going to be messy, so that's not going to be the statement quarter where they may or may not catch up. But if they can continue to operate at this pace, which isn't a huge amount, I think it should stabilize by Q4. But I think that's the ultimate question, at least from an earnings or EPS perspective on the earnings call, which is when are you going to converge here? Are you close to being done on this portfolio and product line? And are you still targeting? I mean, another great question is, are you still targeting 20% gross margin? And what quarter are you going to be there? So I think those are if that's a target that the company put out, you have every right to ask the question of when are you going to get back to the target that you put out? Because the Fed's funds rate hasn't changed since July, right? So the market has done some tightening on the 5-year and 10-year, but the Fed funds rate hasn't meaningfully changed. So I think that's an appropriate question for the earnings call is when are you going to get back to the margin target that you've promised, or have you changed your target?
Yeah. I love that, Jeff. Can I just throw out a good nugget? You just triggered me on something in a good way. Zach leaving. Zach is the one who said the 20%. Maybe Zach was trying to do that, and Elon said, screw that 20% thing. We're driving units. If it's 16%, 15%, 18%, I'm not worried about that anymore because Elon has shifted his mind to different things. He's shifted his mind to AI, and he's going to use the auto business to get there. I mean, do you think Elon really cares about 20% auto margins? I don't.
Okay, no. Okay, so as of today, we are very, very confident at this point that FSD, even before Robotaxi, okay, forget regulatory approval, forget the Robotaxi transactional fees per ride, just stick with FSD take rate. With FSD version 12 showing a lot of promise. And if FSD actually becomes really, really, really good, the take rate goes up. And if you do the calculation, as I just had Brian Wang on show, and he had done a full analysis of just FSD take rate only, it can get up to $80 billion of revenue per year, which is equivalent to what Amazon gets from their AWS. And AWS made the Amazon stock go up 4 times. And the good news is that Tesla's FSD is 4 times more profitable than AWS is. And so just forget Robotaxi, just FSD improves. And that's coming around the corner. Don't we all agree that even, we're not talking Robotaxi, we're not talking that it has to be 99.999% safe and all that. It just has to be good enough that people will want to buy it or to do the monthly fees for it, and then you calculate the margins. And so that has the highest chance of actually increasing margins. And now that they can see that that's coming, they're gonna, let's keep cutting prices and let's cut the cost of the margins of the car.
Xander, I think that's what Elon's doing. Yes, I agree with you, Herbert. I think he's getting units out to then sell the software. The razor blade model.
And as investors, we should agree with that because we also now start seeing that, we can now see the plan versus a year ago, it was still just smoke and mirrors. Oh, FSD is coming, but actually we weren't sure that it was actually going to be ready by a certain time. Now we actually see the tech is working. Real world model, the general model.
Yeah, I mean, I agree. I believe Elon. Look, I listened to the whole book. I listened to all his interviews. The interview with John from Tesla, owner of Silicon Valley. He said, I know we don't believe him. I believe him when he says Tesla's not. I mean, there's value there in the auto plants and the cars. I'm not saying that. Elon's being a bit dramatic, but when he says Tesla's value is in autonomy, what he's saying is Tesla's value is in artificial intelligence in the real world. It's in the bot. It's in these things. The auto business is a static thing, right? It's just, it's already kind of put in the value. So I believe him now. I'm not excited about gross margins anymore on Tesla. That's not the story anymore. That was the story. That's what got it through. It turned profitable and they had these amazing margins. And everybody was like, oh my God, these margins are only going to get better. We have people, I'm not going to, talking about, 30% margin, 40% margins. Those days are over. Prices are coming down. When prices are coming down, unless they have some amazing manufacturing that I am not aware of yet. I know they do, but that can really reduce COGS at a rate that I cannot comprehend. I don't see how it becomes a margin story anymore. This is a AI story. It's in the automobile,
which is a margin story.
Yeah. Well, yeah,
which is the margin story. Come on,
in the hardware. Yes, I'm agreeing with you, Herbert.
Okay. All right. Well, let's move on to next questions. If you guys want to do that. So this is the next question that institutional analysts are asking, and it's crazy. I don't get it. Like they're just they're now asking if Tesla's going to accept legal liability for FSD. If so, when? It's crazy. I mean, like, okay. So like a quarter ago, they don't even believe FSD is going to happen. Now they're talking about legal liability for, Robotaxi ready. It's weird. Very weird to me.
One company has a 5 million unit fleet. The other one has 7,000 per year. So
And you only do that, Mercedes, when you're driving 30 miles per hour. So it's crazy.
Is that an
okay.
institutional question?
Yes, that's what
That's
shocks me.
embarrassing.
Sure, but like I say, isn't it interesting that, which is good news, the institutional firms themselves have 3 questions of the 6 all about Robotaxi and FSD. Like, great. That's meaningful. That means something, doesn't it?
Yeah, it's penetrating more. It's penetrating
Okay.
more.
Now let's take a look at the retail investors' questions, and you can immediately see how much smarter the retail investors are. First question, top question. I'm so proud of this. It's about the progress update on the 4680 cell. I mean, in my mind, the battery is the biggest issue. It's the biggest rate limiting issue. You want to see a technology jump for getting back to 30% margins on hardware. It's the batteries. If they can do 4680 at scale, you can probably, I don't know, we got to find out what Jordan from the Limiting Factor says of potential margin hit, but it'll be pretty good.
Yeah, I mean, it's a battery company. I mean, batteries are everything. Batteries go in the energy, the autos, even in the bot. I don't know, Jeff, if you have an expertise in that. Are they battery constrained on a bot? I don't want to put you on the spot. Like, does that take a lot of battery, or does the bot take less because it's just a smaller entity? Herbert, is there
a lot
any
less.
knowledge on that?
It'll be a
so
lot
that would
less.
be a good thing, right? To scale bot if they had to, right? Because they wouldn't use as much batteries.
Yeah, they're just limited on their ability to produce their own battery. That's what they need to solve. That's what's in the Cybertruck. That's what will make the Semi more competitive. So they need to solve, for producing their own battery. And we're now 3 years into this since Battery Day, actually 4. So it'd be great to get an update. I know they just posted an update on cell output, which is good. I just don't know if there another bottleneck after cell output or not. And what does this mean now for Cybertruck? Is Cybertruck limited to 60 to 80,000 next year? I mean, I think that would be important to know.
Yeah, I think you hit it, Jeff. Like, all these great products, but every time you use a Semi, it takes so many batteries. That's like, what, 8 Model Ys that you could have sold for that Semi. So I understand why Semi is important, and it could be a great product down the road, but that's why I think Tesla just needs that strategy, like, focus on that one thing. And it was Model Y, right? Just grow Model Y. If that's your biggest, seller, and that's your biggest profit margin product, go for it. So I think they just need to keep doing that, because when you just layer products, and I think Elon talks about that, when you just keep layering more products on, they don't have the batteries. Everything they do is battery limited. So, I don't know. I guess I don't know how you solve that. I mean, 4680, to be honest, I mean, it's been a slow ramp. It's not going exactly as they wanted. I think they're having trouble, at some level.
Again, it's been a slow ramp.
A little bit.
They had the problems. They're not there anymore. It's starting to scale at this point. So they've resolved it, and you can start seeing improvement. So yes, I just saying to you that the likelihood is actually more positive now that things are going to start taking off versus that it's a major problem and has continued to be a major problem. So
no, I agree.
Okay.
It's not a negative. It's just more of like, what we were told on Battery Day. Yeah.
Next
Well,
question.
it's been a negative. It's been a negative on their cost
That's what I've been
structure in
saying.
Austin and their supply.
Okay, let's see if Xander, are you back?
Yeah, I don't know what's going on with the audio. I'm using AirPods now, so it might sound different.
Okay, good. So the next question is version 12 progress. How's it going? What are the biggest challenges? How you extract the mind's eye view from an end-to-end network? Again, good second question. Version 12. I think the retail investor knows that this is a significant step change, and we're very excited to see how this is going. Because the question people are asking now is whether or not, when is version 12 going to get to consumers' hands? And Ashok Al-Swami said that maybe it might happen by the end of this year. And Elon is saying that when we do release it and it starts to spread out, that it's going to be not even a beta anymore. That's how confident they are on it. But yeah, I'm not going to rush them on this. If it doesn't happen by the end of the year, I'm not terribly concerned. But it seems to be moving forward, and it seems to be a big deal. So this is very exciting. this is the one that I think we should be all watching, even though because the version 12 applies to the bots. So what I'm trying to say is that once this is really working well, you will see tremendous acceleration of bots. And again, very specific use cases, and you can start seeing that right away.
And I recommend people, like, they're almost like they need training classes for asking these questions. Whoever asked the 4680 question was a good question. It's like, where are you at with reference to what you promised on battery day? And they should be like, well, this is what we promised. Here are the specs, and this is by when, and this is how we're doing. But this V12 question, it's like, how's it going? Like, all right, you're going to get some like
It's so general.
qualitative 4-minute, diatribe answer versus when, like, just the way you phrase it, Herbert, when is V12 going to be released? And what performance should we expect as users prior to the prior release? That's would be interesting to know. But anyway,
Yeah,
showing some frustration.
no,
All right.
you're right, Jeff. These questions, they're fine, but Elon's going to give the standard answer. Like we've had these questions. I know you're excited, Herbert, as part of but what I'm saying is Elon is going to give an answer. We don't need a conference call. He would just tweet out FSD version 12 coming next week. We don't need this moment because he'll do it whenever he wants. Go ahead. Sorry.
I don't know. At every quarter, every earnings call, they answer every one of these questions, and I love them. I think that they're really well, that they actually spend the time to answer these questions, and so I think we get answers.
He'll answer it, but it's the same question. It'll be done this year, or it won't.
Yeah. Okay. Next question that retail investors are asking is the Cybertruck deliveries. Do you anticipate for 2024?
Good question.
Yeah. So I think most of us are all on the same page, right? Yeah, go ahead.
Won't they just show capacity? That's going to be like the extent of what's in the slide deck. You think
very different answer, capacity versus shipments.
Yeah,
right.
Very different.
So will they answer and make a prediction like that? I think they're just going to fly right over it.
They won't talk about capacity on Cybertruck. I don't think they don't need to. I think what they'll say is it's going to be minimal, and then they might just guide for how many units they think they'll get out next year. But I don't think they're going to tell us. Maybe I'm wrong, Jeff. How many total Cybertrucks they can make? Do you think they'll go that far? Maybe.
Well, they've estimated what their capacity will be, but for 2024, I mean, it shouldn't be a small number. It should be a big number. That's an entire year of production. So, I asked a very specific question. Maybe it'll get voted to the top on Cybertruck. But I asked, do you have a schedule defining issue right now on the Cybertruck? And because we're right now we're in the middle of October. We don't have a delivery event announced. We don't have.
Hey, dude. Yeah. Your question made it to number 10.
Yeah.
I should have known it came from you. Schedule defining issue.
Yeah, because is there something on Cybertruck, right, in their testing that is redefining the delivery schedule, or is there something as they started production, we're like, holy shit, we can't make this 10 micron challenge from Elon. Let's start wrapping Cybertrucks. That would be interesting to know.
My understanding is it's a firmware, final touches kind of thing that they're testing, and it's almost daily. This is in the rumor category, but from a credible source. So I think that ultimately it would be smart, or their target, my guess would be by next Wednesday. The slide deck says in production, and not pre-production, but maybe it will just say pre-production.
Okay.
Yeah, I mean, usually you're in production well before your firmware is done. So yeah, I think it's an important call out, Xander. Is Cybertruck better be moved in the production category when we see the update? That would be really odd if it's not.
Yeah, next, we'll just cover 2 more questions from retail and then expand it from there. So the next question is, do you expect the 4680 battery ramp to support both Cybertruck and Model Y production next year? Well, I think just a few days ago, right, they announced 20 million battery cells, the 4680 cell. And I think Jordan from Limiting Factor, I believe he said that that's enough to support both Cybertruck and Model Y, but it'll be good for them to answer. Is that correct, guys? Yeah.
So it seems like it's accelerating, right?
Yeah, it's moving forward.
Yeah.
And then the number 5 question is, will Optimus be working in Gigafactory lines next year? If so, how many would you guess will be deployed? Oh, man,
Now,
this would be great.
Now, that's a great
Fantastic
question.
You and I agree.
Love this one.
Yeah.
Agreed.
It's all about Optimus.
It's all about
For me.
Optimus. Exactly.
For me. That's the
And me
product
too.
for me.
I agree. And I think it's going to happen next year. It will be in the production line. It doesn't have to be thousands. I don't need it to throw out some huge, gigantic number, but it will be there. It's going to be there for proof of concept that it's working. It can happen today. That's what I've been saying. Yeah. All right. Let's talk macro, guys. So I know that this week, let's share this data point here. This morning, we had the CPI results come in, and then they said that, here we go. It was basically in line, right? So 3.7% versus 3.6% of estimated. And then if you take out the energy, it actually did fall significantly from August, 4.37%. This is core CPI. If you take out energy, and it went to 4.07%. And if you can see here, this is if you take out energy, the CPI here, we can see a clear fall, and you can see where it is related to where it has been. We're headed in the right direction. And then this chart just shows the breakdown, and you can see that the energy was the one that fell, and then it started going back up again. And that's the one that's kind of slowly changing it a little bit, but everything else is falling. So you can see that shelter and core services and core goods and even food is also falling as well. What's your reaction to all this, Jeff and Christian and Xander?
I think it was mostly in line. And yeah, I think it was mostly in line. And I think the Fed funds futures that predict, is there going to be a rate move at the next meeting? I actually think it's like 86 or 90%, to pause. It's somewhere in that range, and it didn't really move based off of the update this morning. Again, the Fed can't change oil production. Theoretically, they could destroy demand, so you don't need as much oil, and therefore oil prices will come down. But that's not how they're thinking. So there's other reasons why oil went up, but for the things that they can affect, I mean, they're having a pretty big impact on it. And if you could accelerate the housing data, it's going to continue to fall. I believe that they have to be careful that they don't limit the production to the point where, because the big issue with housing is there isn't a lot of inventory, and it's driving pricing up. So, and the other thing with housing, people don't realize is they took housing out of the CPI, I think in like the 80s. It's owner's equivalent rent. It's like if you were to step out of your home and rent it, like how much would it cost to rent relative to prior months? I don't think it's a good metric, but that's what they're using. It's not high frequency. It's rear looking data that's, a couple months old. So that's why it doesn't move that way. That's why you see these data points of what's CPI, what is it, X this, X that. They're trying to get all these different views. So I think largely it's in line, and no huge surprises. I don't agree with the people that think like, inflation's accelerating. Not when you look at it the right way in terms of with and without energy, and you look at the causes of energy.
Yeah, I agree with Jeff. Mostly it was in line. Again, 0.1, 0.2, it doesn't matter. Basically, inflation's coming down. The trick with the Fed is how far do they want to take it, right? I've been calling the Fed pretty much right all year. I'm on record saying they're not going to raise anymore. This inflation report has caused some people to say, even though Jeff's right, the market is saying no. Some people have said, well, maybe they'll go another 25 because it's bumped up a little bit. I do not think they will. I'd be surprised if they go another 25. And what I'll say is, the market, Jeff's right, the 10-year has moved up. It's done some of the tightening for the Fed, right? Mortgage rates have moved up closer to, 8% now? Car loans are a little more expensive. Anything you have to finance is a little bit more expensive. So the bond market is doing a lot of the work for the Fed. So I think they should be on hold, because I think if they keep pushing harder and harder and harder, that is the more chance of a hard landing. So just from a stock perspective, that's why I don't want to be in anything consumer oriented. I think the consumer's slowing down. If you look at the credit card data coming out, it's being used less. It's coming down. So I think the consumer is starting to slow down. I'm not saying it's a recession, but they are slowing down. So I don't be in anything consumer oriented. That's why I think big cap tech is the big beneficiaries here, right? Like the Googles of the world, even Apples of the world, Tesla to an extent, even though with the car business, it's harder for them. NVIDIA's, because we're in the cycle now of the AI boom, Herbert, to your phrase. Everyone needs these chips. This isn't slowing down. Jensen Huang of NVIDIA has talked about it. For the next year, 2 years, this demand is like pretty much unlimited, right? Google, you're going to go to YouTube, you're going to watch your stuff, whether the economy is doing bad or not. You're going to, do your searches. You're going to need your iPhone, and if you need another one, it's a utility now. You'll get the new one because you need it. So I just think big cap tech has all the money. They got the best balance sheets in the world. Those billions and 50, 100 billions of dollars sitting on there is earning now a great rate in a treasury, a 1-year treasury at 5.5%. That is just a buffer that a lot of these small companies, and that's why the Russell 2000's down, the equal weighted S&P's down, but you see the indexes, which are market cap weighted, the big companies, the Magnificent Seven, we talk about it every week, are driving all the returns, because they could fund their own growth, and they got these monster balance sheets that are just generating cash, and their business are generating free cash flow. So they really have the world at their, in the palm of their hands. So I think that's where you want to be into the end of the year. That's where all the gains have been so far this year. So if we see a melt up, it's probably going to be in those stocks, because any fund managers that have not participated, because they're not super widely owned, to be honest, by a lot of institutions. If they want to catch up, they might have to jump into those names to kind of make their year. So we'll see what happens. But I think big tech's where you want to be.
Christian, can you sharpen the what happened today with the CPI announcement and the yield going up and then the sell-off for me and the viewers?
So yeah, and this is just me speculating. No one knows exactly why. Yeah, inflation was up a little more. So investors, but in the bond market, think, okay, higher for longer, right? Inflation's still stubborn. It's inching up a little bit. So maybe bond prices have to go back up. It doesn't look like we're having a recession, so they re-rate. The other thing is mechanical. We had a 30-year auction, and there wasn't a lot of interest, right? So the Fed, what we talked about before, the Treasury keeps issuing debt. That's another problem with this country. Even though we're more of a stock show, they keep issuing debt. People have to buy the debt. And if there's not a lot of interest in it, right, just like anything, lower demand, that means the interest rate has to go up to attract buyers. So I think the 30-year auction was not a good auction. Interest rate went up, I think, 3 basis points from where it was. So it just made, that got more expensive, right? So there has to be a reckoning at some point in this country, because we keep issuing debt, and that's a problem, right? Our deficits are out of control. 2 trillion maybe this year. We got 33 trillion in total debt. So, that's a factor on equity markets too, because if that interest rate keeps going higher and higher, then those equities look less attractive, because as you go, to the future earnings, they become worth less, compared to a higher 30-year bond or 10-year bond, say. So that's just a high level of what's happening.
Thank you.
Mm-hmm.
Makes sense.
All right, guys, let's get back to the main topic of the show, which is the changing of the guards. What is this tectonic shift that's happening to the kind of the market? I want to show this table here that people are pointing out the Tesla Qs, and people are just worried. What does this mean? It doesn't look like the Tesla's growing anymore, and some of these competitors are growing. So this is a chart that shows the top 10 competitors to Tesla, or who in the EV sales is doing very well, or the top 10 in third quarter sales of the US only. And you can see here that the EV share 2023 third quarter, Tesla now has 49.9%, but they dropped from last year at 62.6%. And so people are going, Tesla's no longer growing. They're losing electric vehicle share to everyone else. But when I look at this, what I see is the only companies that are growing is Rivian. They're the one growing. You can see BMW grew and Mercedes grew, but they're small numbers. Okay, and then you've got Nissan grew as well. But look at the other. That's the one that jumped. So if you calculate that's a 12% decline in EV's share for Tesla, and remember, this is the third quarter. This is what Tesla having two arms tied behind their back because they actually shut down their production. And so there's 12% reduction there. But was it 8% came from, others. So there's more cars coming out and then 2% loss to Rivian. This is before the Cybertruck comes out. And again, I know that we shouldn't be looking at EV share. Let's talk about this. What is happening here? Who has any comments about this? Do you want to start, Jeff?
Yeah, I'm not a fan of EV share. I think we should, and Tesla's even said they look at their share in total auto, not just EV. But if you wanted to spend a minute on that table, I think you can sum it up pretty quickly. Tesla's production was probably around 10% lower than they would have been normally if they didn't do the shutdowns. And then you have BMW and Rivian ramping EVs like they said that they were going to do. That's about 4 points. So if Tesla, would have added 10% more production, they probably would have been, instead of 50%, maybe closer to 54, 55%, and then the other 4% came out of Rivian. That would get you closer to 60%. So, and what's happened year over year too is people are starting to ship, their vehicles, but there's a list of 15 there, and none of them really have meaningful volume except Rivian, and it's everybody just starting to ship an EV. The problem with these companies is they're just doing a couple of thousand, and either it goes end of life, it becomes uncompetitive, it goes into inventory. And if you look at the lifetime economics of these vehicles they're shipping, this is why you're not seeing this rapid transition to EV, and they're taking it, extremely slow. And that's going to continue until they figure out the economics of how to produce an EV profitably. We still don't know today if anybody is producing a profitable EV besides Tesla. There's no data out there that says that someone definitively is doing that.
Herbert, can you put the chart back up for me?
Yeah.
Please. So, I'm a numbers guy, and like Jeff said, this focus on EV share. Why don't we just look at that 314 total number and that 209 total number, and seeing that the competition is really ICE for the adoption curve. I see tremendous progress, and Tesla's EV share is going to continue to go down as it should, right? We want the adoption of EVs, total, not just Tesla's share in it.
Yeah,
okay.
I agree with Jeff. I think EV share is a bad way to look at it because, you get some put a few thousand units out. Of course, Tesla's share is going to go down. So I'm not worried about that. And plus, quarter over quarter is a bad way to do it. Maybe year over year would be a better metric.
Yeah.
Well, that is
which one of these is a real business? Yeah, and then which one of these is a real business that could ship? And number one is number two. Number two is losing $60,000 for every car they ship. Number three is losing $32,000 for every car they ship. Number four killed their highest product line and then brought it back because they didn't know what they're doing. We don't know what they're making per car. They're probably losing $30,000 to $80,000 per every car they ship. BMW, we're not sure. VW, we know they're losing money. Their factory managers have said that, and they said they want to reaccelerate non-EV production. Mercedes, we're talking, 10,000 cars. the SAR for the United States is basically around 4 million cars a quarter. So they're doing 10,000, of the 4, So anyway, like the big thing is Xander brought up the right point, is that 209 going to 314, that's the 50% growth in North America. And right now it's roughly, I think, 8% of the cars sold. So if we can continue on that 50% growth and kick it up to 12% next year, and then now the 12% goes to 18%. Now you're starting to get in some really meaningful volume. And the question will be is where will number 2 through 10 be? Tesla will lose EV market share, but Tesla will gain overall market share. And the other big metric to me is going to be profit share.
The other thing here is that only Rivian and Tesla sell direct to consumers. The rest are possibly channel stuffing to their dealers. And we know that they've done that in the last quarter. So a lot of these numbers are going to be false. Anyways, like we said, it almost doesn't matter. We don't care about the EV shares. We'll care about total shares. This doesn't say anything about Tesla faltering. It talks about maybe the others are starting to produce electric vehicles, which is fantastic. And like you pointed out, Jeff, wonderful. Many of these will not survive. We know that. In fact, probably all of them won't survive. Only Rivian, I'm really hopeful. They've got a chance to try to turn to be profitable, but the rest, it's very, very unlikely in my mind. And so what's not shown here, this is just the US, is the Chinese car manufacturers. We just had a tweet from Elon very recently, just a few days ago, and he said it's actually the China automakers. They're the ones that are going to be the most competitive. And then, as we started talking about at the beginning of this show, what really matters is autonomy and FSD. So this is comparing, the transition from gas cars to electric vehicle cars, and there's so many benefits of an EV car, as we all know. But then, what happens when you add in FSD, right? Just safety and just convenience of it being able to help you drive and so forth. And so that is just going to be completely changing the game yet one more time.
Christian, you were going to say something?
No, I was just, I don't know. I had a question for Jeff. This was a pro Tesla account, and I know we talked about it before, so I don't know if we can spend too much time on it, but Tesla's brought prices down. They have a great product, right? Which is good for the consumer. But Legacy is still moving units at higher prices than they did. And again, that could be with the COVID and the things of that, but somehow, and he said, like, I forget the account, but like that was an accomplishment for Legacy to be able to still move these dinosaur products out the door at much higher prices than they did, previously. I don't know. Do you have a comment on that? Why do you think that?
Yeah,
is it just people still want those cars? Go ahead. Sorry, Jeff.
Yeah, the U.S. auto industry, the global auto industry actually, but the U.S. auto industry has been constrained for 3 years because of how they didn't properly plan and how slowly they recovered from COVID. So if you look at just take the U.S. for example, the U.S. SARs were roughly, I don't have it in front of me, but the SAR is the number of units that auto manufacturers ship into retail. In the case of non-Tesla, they ship into dealers. In the case of Tesla, it's direct to consumer. But just think of that's the number of units, okay? And pre-pandemic 2019, I think, don't quote me, but I think there was a 17 handle on SAR in the US, 17.2 to 17.5, something in that area. And now, and what happened then during COVID, 2020 to 2022, and their slow recovery, it shouldn't have been 3 years, but you had 13, 14, 15 million, so I think 13 to 14 million, maybe there was a drop off during that. So this year we're going to be at 15 and change in the US for total shipments, 15 point something million, maybe 15 and a half. And that's a 10 to 15% increase from the prior year. And that's what everybody's talking about, but that's compared to a supply constrained year. You really have to compare them back to 2019 when they're at 17 million. So the auto industry is actually down 10%. But Tesla in 2019, they were at, I think, 367,000 units shipped that year. And now they're going to be at 1.8. So they've gone up 5x. The rest of the auto industry in the US is down 10%.
I gotcha. So they're just moving units at a higher, selling less of them, but selling at a higher price than before, but they're moving less units.
You're moving less units, and then during this time period this year, their inventory, their days of inventory on EV has doubled. So Herbert's point was right. They may have increased shipments in Q3, but they've also increased their level of inventory on it as well, the days of inventory. I mean, we're talking into the hundreds. This isn't like they increased from 20 days to 40 days. They target 50 to 60. They're in the hundreds for EV. So they've got an issue there. But I think this is kind of like a slow moving thing that's going to play out. And on the other side of this, you're going to have Tesla. You're going to wake up January 1st. IRA is going to be point of sale for 96% of what Tesla produces. You're going to wake up and the 3 and the Y are going to be 15 to 20% cheaper. The other companies, they get some IRA credits, but they don't have supply and volume of their EVs. So they're not going to enjoy as much of that. And then on the other side of this too, if this is going to be a higher for longer thing, well, what has Tesla done? They've worked on their lease rates. They've worked on the total price of the car. And these other ones, now that they've gone through their supply constraint and they've fulfilled a lot of this pent up demand, they're probably going to get challenged on their average selling price. And we're already starting to see that in some of the Cox Automotive data that is starting to already shift, or they're not going to be able to keep prices up where they were. So I think Tesla's been playing a better kind of medium term to long game. It just looks bad when you're in the moment. But I think a year from now, we're going to look back and we're going to say, wow, Tesla basically brought their pricing back to where they were at launch for these vehicles. Their COGS is going to be way lower than where they were at launch. And they're going to have 2 brand new Model 3 Plus and Cybertruck out there, both probably doing really well on gross margins. And then you're going to have a very mature Model Y that's going to be great on growth. I think you're going to look back a year from now and say, what, Tesla made the right moves.
Appreciate that, Jeff. Thanks. Good bunch.
All right. So who's going to survive? We think that the union strike is actually pretty severe and it's continuing to move on, although we've seen both sides trying to give each other some sort of negotiation responses. And most recently, we just heard that Ford expanded their strike to the largest, the largest plant the Ford has at the Kentucky truck plant. They had 8,700 members went on strike. And then Ford came back with a statement saying that they think that they're now at the point where that strike at the Kentucky plant is going to push fragile supply chain towards collapse. So not only when they negotiate, they need to increase the salaries of the workers, which is going to impact margins, going to impact their survivability. But even now, Jeff, you probably the person to answer this because you know so well the fragile supply chain. If you put everything in stop after a certain month, maybe after a month, you got to like stop everybody else, and they don't just turn on and off, right? They need to wind down, and it takes time to wind back up, and so it might actually be pretty well a death knell. Or where do you stand on this? How severe is this?
Well, let's just key off of Christian's prior question. The global autos, the U.S. auto SAAR at one point got to around 21 million units. So there was a U.S. auto industry that built up capacity to put 21 million units out of production and into distribution. And now that whole entity that produced a 21 million dropped to 17 million in 2019. And now we're at 15 million. We're celebrating because we're up higher than the prior year. That's a big reduction. There's some estimates from folks inside of the auto industry that believe the U.S. auto industry is over capacity, probably 30 to 40%. And we don't talk about this enough. So now you got the UAW coming in and saying, look, we're not getting paid enough. The benefits they're not where they need to be. We need this, and this from you. The automakers, and they're looking back into their supply base and they're like, well, wow, we're not very strong. I know we've thrown off some great profits because we have pent up demand. We can keep the pricing up, back to Christian's point. And we had some pretty good profits this year. And guess what? We paid ourselves as CEOs very well. But when you kind of look ahead, it's not a pretty picture. The supply base is over capacity. That means they have idle capacity. That means their utilization's low. That means their fixed cost structure is high. So in these situations, so this plant shuts down, I think it throws off like 25 billion or something of revenue. It's almost like where Fremont is. Fremont is the biggest auto factory in North America, by the way, Tesla Fremont. But this one's right up next to it, and it's a big deal for Ford. So Ford has about 13 plants that feed into this one or feed out of it, if it's parts distribution or if it's stampings. And so all of those are probably within hours or days, they're going to be affected. And so this UAW telling these 8,700 workers to walk out of that plant in Kentucky, there's 13 satellite plants around it that are going to be impacted. And all of those plants have suppliers that feed into them. And of course, the Kentucky plant has a supply base that feeds into it as well. And in the supply base, there's something called tiers. And there's in the tiers, like how close are you to the OEM? Do you supply the OEM directly, or do you supply somebody that supplies the OEM? And in the case of the tier one suppliers, I would say they've got a capacity problem, meaning they have too much capacity. And some of them are going to be under some fairly big stress. Now, when that factory shuts, they say, look, I don't need parts. I don't need you pumping out stuff. I don't need you pumping out stuff in the case of like, hey, we think we're going to get this solved in 2 or 3 weeks. I don't need it because I'm not going to be able to turn it. If I can't turn it and convert it in the quarter, I don't want it because it's going to appear on my balance sheet. So this is the balance they have to weigh, which means they're going to have to start shutting down in the supply base. And what Farley's basically saying is as you go deeper, tier 2, tier 3, some of these suppliers are like, I'm the supplier that does the plating for the door handles. I'm the supplier that does the door handle assembly. I'm the supplier that does, the mats. Where some of these suppliers only do this one part for this one model. And when that model is shut down, they have nothing. So when they go back to their bankers and say, hey, look, like I have to idle my factory, the UAW strike's going on, bankers will look and say, well, what kind of business do you have? Well, I make the door handles on the Monte Carlo and the whatever. And we're like, well, we don't see that business. Is that business growing? Well, no. Well, then why are we going to lend you money? So then now all of a sudden, bankability becomes an issue. And so I think this to me, I liken this to the regional banking problems from February and March of earlier this year of like the Fed raises rates too quickly and all of a sudden something starts breaking in the background and all of a sudden you don't know it and it just hits you. I think you're going to start seeing that with the supply base for Ford and quite frankly, all three of them. But in this case, this Ford one's going to hit them pretty hard.
Yeah, well said, Jeff. I think there's major catastrophe is looming for them if they don't settle this quickly. This is going to go on now for a while. We predicted that it would go on and get messy, and it's getting even worse than what I thought. It doesn't look good. Yeah.
Yeah, and there's hundreds of thousands of people connected probably to this one plant. In the U.S. auto industry, there's probably a couple of million people that are connected. Again, when you think about it, it's not just here's the 150K UAW workers. It's well beyond that. There's non-union, and then there's all the whole supply base, and then there's all the infrastructure around the supply base, right? So, yeah, it's a big deal.
Yeah. Good stuff. Thank you for the bankruptcy.
You're muted, Herbert.
They're skyrocketing. They're skyrocketing.
Why can't people see what I see or what you guys see? I mean, it's just so obvious to me that not only are these competitors all struggling, every competitor too, by the way, not just certainly the legacy automakers, and now you got the strike, you got the dealership issues, they can't make profitability, they're stumbling with their software, they have no efforts with FSD, they have a good business, but it's on ice, which is dying, and everybody, some people say that EV's a niche, like, okay. Governments and states are absolutely incenting EVs. So for that bit, and then you look at the Chinese automakers, which are definitely something you cannot, discard or you should be fearful about them and watch them grow because they're going to succeed because they're funded by the government. But they don't have automation. They've got the LiDARs. And so if you think that could be, offer widespread worldwide ability to do autonomy, they're concerned. But anyways, I just think that Tesla is just so far ahead. So let me share a tweet here from our good friend, Christian Valente. You got to follow everybody here. C Valente 28. Every once in a while, there's some brilliance that comes out of Christian. I'm just kidding you, dude.
Yeah, no.
So he says this. Listen to this.
Come
Okay,
on.
buying great companies is great. Buying great companies at an amazing valuation is greater. Buying a great company when nobody knows how great it is, that's the greatest. I think Tesla, which is weird, okay? It's like the top 5 companies in the world. I think people don't realize it is a great company that nobody knows how great it is. Who disagrees with me? Come on.
Not on this,
No.
though.
I agree with you. That was just something that hit me on the head and play with the word great a lot. But you're right. Like, Tesla is that, but think of Tesla when you guys originally thought about it in 2000, whatever Jeff started buying it or Herbert started buying it. Like, I didn't come to it until 2019. So yes, but it does hold, right? If nobody believes that a robot will be done, if nobody believes that FSD, there will ever be a Robotaxi, and those things happen, then yes, then it is the greatest because no one sees it coming and then it comes. So if there's no value being accrued to it, yeah.
I guess the one thing I can understand for people is that they have seen Elon make statements that doesn't seem to happen every year. So the FSD statement, I think, hurts significantly because it hurt the ability for people to realize that does Tesla achieve what they say that they're going to achieve? In my mind, again, maybe I'm very, very biased. I think they achieve everything that they say. Some things come later, but they achieve incredible things that they say they're going to do, and it's coming later. And this Robotaxi FSD is coming, despite him saying it every year for 5 years. It actually is coming. So why would you now doubt that the bot is going to be able to do what they think it's going to be able to do? We're witnessing it ourselves, that energy is going to become a very large business, everything basically. But you know what I mean? Like, there's people out there who still very much disagree and do not see what I see of where this company is headed. Which one of us is delusional?
No, I agree. I think they'll come. Xander, Jeff?
Well, I mean, if you watched this show a year ago, or if you watched our tweets, I was certainly talking about the fact that, this whole thing of the competition coming. I didn't think that Legacy Auto knew how to make an EV at all. And they've been able to produce something and ship it. But I mean, they're literally losing $30,000, $40,000, $50,000 when they ship one of these things. That just shows you how far behind they are. And Tesla is, making $8,000, $10,000 or more for every vehicle that they ship. That actually shows you how far behind they are. Because it's one thing to be able to sit in a prototype lab and put something together. I'm like, yep, we got an electric motor. This vendor shipped it to us. Yep, we got this. Yep, we figured this out. They still can't even get their cars to update software. So over time, they're going to figure some of this stuff out. But there's things that have much longer lead time to do, which is like, how do you design product? Do you vertically integrate your engineering efforts so you can bring all the components in? That takes years to unwind what they're doing. So going back to the full circle to this supply base discussion, it's bigger than the UAW thing. All of these automakers have to fundamentally transform how they design cars in order to meet and catch up with the cost structure that Tesla is putting out there, because Tesla is not going to stop. They're going to change their manufacturing approach within 2 years, and they're going to be throwing off a lot of gross margin in cash when they do that. And even between now and then, I think they're going to produce a simpler truck, and they're going to have significant gross margins in what they do. So that's how far Legacy is actually behind. And on the other side of this, remember, it's going to be higher for longer. They're going to fulfill their pent-up demand, and then what? Which ones survive? Do some of them merge together? Do some of them, sell off a legacy business, what is this going to look like? Is there going to be a bunch of mergers that happen, or is the government just going to step in? Is every major government, European Union, are they going to bail out, their major auto manufacturers, or the U.S. automakers have been getting bailed out the last year? I keep repeating over and over, $27 billion has gone out to U.S. automakers in the last year from the federal government in loans and grants. So, I think on the other side of this, it's going to be interesting. But no, we're not crazy. We said a year ago that we were laughing at the competition coming, because all they're going to do is produce a compliance model and ship it out there. It's not going to be in meaningful volume, and it's not going to be at the performance and specs that you'd be able to buy a $45,000 Model Y and get.
Okay. Last few minutes here. Let's have something fun. Another tweet from Christian. Thank you, dude. So apparently 1 year ago from the last 2022 Q3 earnings call, Elon said this. He said that that at some point he sees a path for Tesla to become larger in market cap than both Apple and Saudi Aramco combined. And so if you did the 2.2 plus the 2.1 trillion, Tesla needs to be at the 4.4 trillion. So the question for the bulls here, is this going to happen and when? Let's go down very quick. Each person tell us, is it going to happen and when? Go ahead, Xander, you go first.
I was actually going to comment on the last question, which actually ties in exactly what you shared with Christian's tweet. This short-term thinking that the market has, like, what have you done for me lately? Yeah, you have to be forward-looking, and if you put it all together with the cost reductions through Battery Day, as we saw, that's one of the questions is where are you in that direction? The unboxed method, the Cybertruck simplicity and the margin potential of that vehicle, and the energy portion of the business, as that grows and scales, and you start getting some serious revenues out of that, what does the company look like? And that's really what people have to remember is Elon and team are looking very, very far forward, and they set their goals at you see 4.4 trillion with this one, but what about the 10 trillion discussed in the book? So if that's what they're shooting for, even if they miss, that's the kind of CEO and company that why I chose this business or this company, because they go that far, and you guys were talking about puts and calls that it's a put on. It's like this optionality that what's next. Like you were talking bots, but what's the next thing that hasn't been revealed yet? That potential exists in this kind of company, not in my opinion, like Rivian or someone or Legacy. So yeah, that's what I think.
So when is it going to happen? And yes, it's going to happen.
When? I don't try to predict that. I just look for the potential, and is there a bankruptcy risk? And what percentage of the time does Tesla miss on their targets? I look at that historical. I don't try to predict is it 28 but if you want to have fun with it, I'd say 4 years. I'd say so 20. I'd say 4 years. I think it's going to take a couple of years of macro.
My question, because he's unprepared.
He tried to be conservative and he goes 4 years. That's crazy.
No, well, look. Macro is going to take a couple of years to clear up. And then what happens? We've talked about this previously. What happens when analysts starts chasing the stock? What happens when the story has shifted to the point where we were in 2019 coming in buying that story, which was more of a margin story and optionality. But now it's evolved, and so yeah, I think 4 years is
Wow.
it could be 3, it could be 5, but I like 4.
Okay, Christian.
I think it will happen. I'll give you an exact quarter. Q4 of 2026.
Okay, Q4 2026 is
Just for fun.
that's even faster than
Yeah,
Xander.
4.4 trillion. But you heard it here.
You're crazy, you two. Crazy. You guys are delusional. Okay, go ahead, Jeff.
Jeff is the pragmatic one, or whatever the.
Sure, he is. He says so.
Come on,
Go ahead, Jeff.
I'm going to say 2029.
Oh God. Okay. See, you guys are you're too far off. They're too close. I'm the pragmatic one. So it has a 6x, right, from where it is today in order to get the 4.4 trillion, and it's got way more than just cars. And you do need to have revenue, not just a story. So it's going to be the AI, it's going to be the energy, it's going to be the bot, it's going to be the Robotaxi. All 4 of those has to come in, and a couple of them have to start generating significant revenue to be able to get to the 6x. It's going to happen. I don't think it's going to take long, but I will say it's going to be more than just 4 years. I would go with the 6 years. Wait, am I now at the same stage as you are then, Jeff? Okay. Maybe I'm
No,
in the
you're
same place
saying
as you are.
2030 plus 6. So.
Oh, I'm further away. I probably, gosh, how quick time
So
flies.
I'm the real
right.
bull. Now we found out today that I'm the real bull.
Yeah, exactly.
Boo.
But Herbert, it doesn't have to have these things coming in. What happens with all the things that I mentioned that Tesla drives up margins, and you have some revenue coming from software as a service or take rates. So the market is forward looking. What kind of multiple are you going to apply to those revenues?
Yeah. Well, in fact, all it takes is just AI, right? If there's an AI
Right.
play, which there will be, there's going to be a huge AI play with the supercomputer and all that. That's just even that alone could be enough to 6x.
So let me just clarify all those things coming together. And then for me, just in my mind, just to solidify it, I'm thinking by 2026, 2025, they are now scaling bot, right? And the market knows they're scaling bot, and they're doing it.
Alone.
And then what is the value of that? Like Xander said, put a valuation on that, and then you'll see the stock move before 1 million bots are made. You know what I mean?
All right, everybody. Thank you for watching us. So you got to follow Christian Valente, Xander Sky, Jeff. Alexandra Merz wasn't able to join us today. Follow us on Twitter, on X at CyberBulls 1 on X, and also we do a regular space on X every Tuesday at 3 p.m. Pacific time, and then we do this every Friday. Thanks, everybody. See you soon.
Thank you.